Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. The U.S. Department of Agriculture's latest progress report shows 71% of this year's corn is in the ground, along with 32% of this season's soybeans. Planting advanced rapidly across several of the largest growing states, including Minnesota, where farmers planted nearly half their corn crop over the 7-day stretch. In Nebraska, 31% of corn and 4% of soybeans are now listed as emerged. Corn and soybean markets had been relatively calm, but beans raced lower early Thursday as Brazil's president faced allegations of bribery and calls for his resignation. We talked with Luke Thursday morning and started by asking for an update on current conditions across the state.
So in northeast Nebraska, a lot of the corn is in the ground. We're seeing the crop come up. I think for the most part, things are fair. We probably have a lot of soybeans to plant, or a fair number of soybeans to plant north of the Platte River. You go east to Highway 81, get up into Iowa. There's some soybeans to go on the ground yet. Tail end of corn in most of those cases.
Not necessarily any problem areas, though, that the market is at least keeping an eye on?
I don't think so, not that the market cares about. I mean, we saw planting progress move up pretty intensely in the western Corn Belt week over week Monday. More of your problems condition-wise would probably be in the east. Now, we don't get our first conditions rating for the United States corn crop until the Tuesday after Memorial Day. We've seen some state-level reports out of places like Illinois that would potentially be something that we can talk about here in the next few weeks, as the corn crop doesn't look quite as good to the east.
So we talked on the phone yesterday, which was Wednesday, and said it's been pretty quiet, and then Thursday morning soybeans are down more than 20 cents a bushel. So this has been a little bit more lively than we expected. What's going on?
Absolutely, keeping us on our toes. We had talked yesterday about the U.S. dollar being weak, and that was something that we could certainly discuss. Yesterday then we get news out of Brazil that political turmoil there and some bribery and hush money was creating the real to fall, and that's changed the dynamic in the soybean market overnight. So the real is down, and what it does, Jeff, is it creates higher prices domestically there for the farmers. So the real is down 8% as of this discussion, and on $9 soybeans, that's 70 cents a bushel up that those producers would realize. Now the Board of Trade in the U.S. is down 20 cents, so the net impact is a 50-cent increase to the price of their soybeans because of a currency gyration. So what has been happening is we've seen export business come back to the U.S. because the Brazilian farmer has been holding on to their soybeans, and a lot of that has been because of currency. So this has really loosened the situation up in South America. It's very early. This is Thursday morning. A lot of people trying to get their arms around it, but you would think that the Brazilian farmer is going to be a seller of soybeans with what's happened in the currencies, and probably some export business rotating back to South America from the U.S.
When it comes to soybeans, just a little bit further on exports, have they sort of dragged on longer than you would expect from the U.S.?
Absolutely. We've seen the export book really remain strong. There's been export business out of the U.S. Gulf. Basis had been firmer, pretty much as we've been into the early parts of May. So it's early to see if those values are going to start changing here as we close the book on this week.
Corn has remained quiet, however, and now that we're through the bulk, at least, of corn planting in a majority of the states, how do you update the marketing plan with no immediate weather scenario?
Yeah, so we continue to remain pretty range-bound in the corn with not a lot to discuss. And so one thing that we've really been talking to a lot of farmers about is that, in this seasonal time, typically we see something happen. The funds are intensely short the corn market, 220,000 contracts as of last Tuesday, and you think that's a powder keg to create a short covering rally for us. So our question that we want to start putting in front of producers, we understand there's a lot of weather that needs to happen for this corn crop, but what if the corn market doesn't really pop and present us with that opportunity? How do we treat old crop sales, and how do we treat new crop sales? I think it's a conversation you want to start having just as a contingency plan. The nice thing about it is if you look further out on the curve, like March 18 futures, they're right around $4 either side of it when they're at the upper end of their range. So can we put floors at $4 corn for your new crop to at least know that that's a worst case scenario? Those types of conversations I feel are productive if we don't get this rally that we need. Do you really want to go past the 4th of July with no new crop corn marketed? That doesn't feel very good.
Right. Is there a position or a percentage that you kind of want to be at a certain point in time with either old crop or new crop corn?
Certainly, and our philosophy is going to be different than a lot of folks and for farmers as well, but we tend to market new crop corn ahead to know what we have. So what we talk to guys about, what do you need to execute between harvest and the next time we hit a seasonal marketing window, which is April, May of 18. If you need to move 50% of your crop in that window, then you need to have 50% of your corn sold ahead, because otherwise you're at the mercy of the market in the winter, and that's typically not a good thing.
Update me on where basis is in corn.
Yeah, so basis has been firming in corn because we've been so range bound. Demand's been good on the local level. So basis is firmer in this shorter window, but grain really has not been moving locally really since the 1st of March. And the crop hasn't gotten smaller that we harvested last fall. So what we're doing is we're compressing this corn crop into a tighter window that needs to be executed this summer. So firmer on the front end, but outlook concerned a little bit about what basis could look like this summer.
If you have to lock in basis, any recommendations as to when to do it or what to look for to pull the trigger?
Always an interesting conversation. I think your logistics certainly play a part. If you can be moving corn anytime in the next 30 days, it's probably going to be a good thing. You can also lock basis further out on the curve, knowing that you can execute in the month of July if you need to. The problem is if we get a rally, there's a lot of corn that's going to want to hit the marketplace. So basis values are going to get defensive. You can protect yourself by doing basis contracts or selling cash and reowning, those types of strategies now while basis is firmer before that would happen.